Hello, good day to all of y'all. Once again, I'm Kuma. I just want to share some of my thoughts on the new management case study for May 2017, the company called BES. It's a company that is dealing with what we call single selling price outlets, something like dollar shops. So previously I did a little bit of a analysis of the industry. Uh, and once again, it's just a little bit of a analysis on the Preseen. So you will probably get an idea. And just to introduce me, I have been doing some online Cima tuition for some time, for last 10 years or so. I've been doing mostly on the top Cima. Then in the recent past, operational case study, management case study, and strategic case study. So this is little bit about the latest strategic case study what we have, the company called EES. First of all, let's start off with your job description. Normally, as we always find in the management case study, you are the finance manager employed by the company. So you have to remember always, in almost in all our case studies nowadays, you are an employee. You are an employee of the company. So that's very important for us to know that one, because whenever we write something to our finance director or the board of directors or to anyone, for that matter, we must remember that I'm part of the company. So it's good to use the language when we are writing our company, we, that kind of language, rather than all the time talking BS, BS, because you have to remember this case study always it's a very practical aspect of your work experience. For next 6 or 7 weeks, you must get into this company BS. You must know in and out of this company called BS. You are part of the company, so you should know who is your CEO, who is your chairman. That kind of information you must know. And as the management accountant, you must know probably about costing, little bit about the budgeting, also about your financial accounts, how much profit you made, what are your profit margins. Not necessarily you will memorize, but when you're working in a company, you know some of these details. This is the idea of the pre-sale. You become very well, you're basically, you become part of that structure, and you should be living inside that company. That's the idea of the case study. If you can get that into your grip, these case studies become very, very interesting. It's not another exam. As far as I'm concerned, I don't even consider these things as an exam. It is simply you're working. And in the working environment, you know your setup very well. Suddenly in the morning, your finance director will call you and say, hey, we have a problem. We do have a special order coming up and we need to think of some different pricing. Can you give your ideas within next 45 minutes? This is the typical management case study. You are a middle manager. You are not at the lower level. You are not at the higher end. You are a middle manager as the finance manager. You generally work with the finance director in this particular company. And of course, you can see you assist the finance director on special projects as and when required. So you can see you are simply a financial man. You will be working on very special projects, things that can come up as a one-off thing, maybe an expansion, maybe an acquisition, something like that, where finance director will probably call you and ask you some information. Can you do this thing? Or might he want, because you are a recently qualified accountant, so you probably have a little bit of advantage of all the new development. So this is the kind of work we should be looking at. And also in this case study, they say you will be responsible for management accounting function. So we know what is management accounting function. It's simply a proactive function. It's not the historical function of preparation of financial accounts. That's not your baby. Some other people will do that work. And remember, in these case studies, you don't have too many calculations to do. So don't worry too much of calculations. Few little ratios just to get an idea. But surely you will not be tested on big calculations. And preparing the group budget. So this company later on, as you will realize, the financial statements they are given are the consolidated financial statements. So that means it's a group of companies. Now I'm still trying to figure out what kind of a group it is. I mean the subsidiaries. Is it individual storehouse a subsidiary, or do they have two officers north and south? Later on we will come across. Whether that's the subsidiary, I'm not exactly sure. Later on, probably in the unseen, we might have a little bit more details. What is a subsidiary? And supervising regional finance managers. So you are the finance manager for the head office, and later on you will realize there are two regional offices, south and north, and probably you are overlooking the functions of those regional finance managers. And I'm sure regional finance managers also have the same functions as you, management accounting function for the particular region, preparing not the group budget, but preparing their regional budget, and that's maybe their job. So good to understand your role all the time, and remember always you are part of that company and you are very much in that family of BES. They are just given us the background and the business model. So basically it operates a single value retail stores in country E. So country E is a fictitious country. Here again we do not know in which part of the world this country is. But what we know is it's a listed company and the financial statements are prepared in accordance with IFRS. So that means we should be somewhat be updated with our accounting standards, the IFRS. Uh, Remember, you are the management accountant. You are not preparing the financial statements, but you may be interpreting the financial statements. And to that extent, you must know certain IFRS, etc. And the currency is a fictitious currency called E-dollar. So don't try to compare with US dollar or something like that, because we do not know the parity rate or anything. So we can't take E-dollar and compare with US dollar and do that kind of a thing. Too dangerous to do. So don't try to work on that kind of a scenario. This company was established in 1995, so it's about 22-year-old company. Remember, we are in May 2017 by the time we sit for the exam. So we are in May 2017. So it's about 22-year-old company. We saw in our industry analysis, these dollar stores or dollar shops came somewhere in the 19th century. So it has a long history. And our company is somewhere in 1995. And what we can see is they have rapidly expanded, acquiring existing value stores. So probably the subsidiaries must be these different value stores what they have acquired, because later on you can see there are some intangible assets in the statement of financial position. So we do not, maybe goodwill included, but they are not given specifically the goodwill. So we have to just wait and see what are those intangible assets. But surely they have given the amortization rates of brand names, trade names, etc. So surely some part of these intangibles are the things like brand names. And you remember IS 38 says only what the intangibles what we have purchased can be reflected in our consolidated financial statement. So, they coexist in value stores for conversion into BS and lease in retail sites. So, they have retail sites leased out, and that may be on which they have to pay lease rental, etc. Even though the company was established in 1995, they have gone for a public offering in 2012. So after 17 years, they are listed now, and for 5 years now, it's a listed company. And by end of 2016, it has 240 retail stores, including 5 trial stores that were opened in 2015 in neighboring country X. So 2015, we are now in 2017 May. So we have to just watch it and see when these things are open and how long the trial scenario is going. Because remember, you are a person who is going to help the finance director on special projects. So there may be more new shops opening up in country X or maybe another country, and in that kind of evaluation, your assistance will be sought by the finance director surely. So they go by one single price. In my industry analysis, I said there are some companies, they go, the variety stores, they go by one single price. Some others, they go, even though they call it by single price dollar shop, they might have different multiple prices. We saw some going from $1 to $60, some going from $1 to $3, kind of a range. So, but this company seemed to be having everything in the $1 range. It is very attractive definitely to the shoppers because it's a kind of a very great attraction because people know that everything is priced at $1, so they believe it's value for money, and in this country they earn $7.50 per hour. So say assume they work 8 hours, they must be getting $60. So with that kind of a money in hand for a day, this kind of $1 shops surely should be some kind of attraction. But from the company's point of view, with a lot of attractions, the shopper know what he has to pay. Store staff need not be very, agile in stating prices, that kind of a thing. And, checking out prices because everything is $1 and very little customer queries, I suppose. And you don't need to do too many updates because the price need to be maintained at $1. So these are the particular advantage that is coming up. Surely the checkout will be much, much more fast. However, I must say from the company's point of view, particularly in this Preseen, it is said that $E is comparatively weaker to US dollar. So most of the suppliers prices are in US dollar. So that can cause a kind of a profit erosion with the exchange fluctuation. Because when your home currency is depreciating, when your home currency is weak, your cost will go up purely because of the exchange fluctuation. And when you are committed to sell at $1, that will have a big impact on your profit margin. So this is something that will have a kind of a issue, I suppose, in this case study. Somewhere down in those variants, they will have something how to manage this exchange risk or the erosion of profit margin. The traditional retailers, they say they are not affected by BS. BS, by the way, in country, they are the largest, this $1 or single price setup. So they are the largest. The next one is some other competitor, but these people are the largest in the range in this place. So the retailers basically they say they are not affected by these price changes, whatever that is there. However, even though they may be saying so, they have introduced, the supermarkets have introduced their own $1 fixed price ranges. Surely that is going to be a competitive threat for our company, because in supermarkets you get a wide range of products at different prices, and anyone who wants a $1 area, surely they will have an aisle with the $1 product. So instead of going to BES shops, people can go to a supermarket, buy all the other products at different prices, and whatever $1 things they can come and buy it. So even though the retailers do say they must be feeling the pinch of this new setup, and they do have followed BES in trying to work out the $1, and then there is direct competition. You can see the average product portfolio is 2,000 products. Now remember, I discussed the productivity of these dollar shops is measured by the formula shoppers into the number of trips into the basket size. Shoppers into the number of trips into the basket size. That's the way we measure the productivity. If I remember right, in this company, the average basket was $470. It has grown from the last year by 3.6%, and it was 470. Now here there are 2,000 products average in the product range. 2,000 products. 2,000 products and 240 shops. So you can see they are purchasing kind of a thing. They sell mainly three categories of products: the branded products, unbranded products, and their own branded products. Now, most of these retailers, they have been shifting to their own branded products. Now, out of 2,000, you can see 35% of the products are still third-party branded products. 45% of the product is unbranded, but 20% of the product is your own brand. BES is a well-established company, 22 years in the market. Later on, you can see they maintain very high ethical standards, etc., etc. So surely, in my view, this is a company that has a good brand name, but there are a couple of stories later on you will come across where they probably had a little bit of hiccups, but surely they are a company that has a fairly good brand name. So these branded products, they are generally available to customers in supermarkets and with all the other different retailers. And so branded products, the BES will have to compete with the supermarkets and the other retailers. Unbranded products, generally, they are not so much in the supermarkets kind of a thing. So they basically will be selling most of the products through these single price setups, the dollar shops, and you can see there no doubt 45% of bulk of the products out of 900 out of 2,000 is the unbranded products, and they may be sold by several retailers, but generally unbranded products are cheaper because shoppers think they are not quality or not that quality. It's basically that assurance is not there of the quality. So generally compared to the branded product, the unbranded products must be cheaper. Branded products, not that they manufacture any of these products, they outsource it, they get it done for themselves, specifically with the BES logo, BES trademark, they will put it and they will exclusively sell through their stores. So some of the products, surely they must be competing their own brand with some other unbranded and some other branded. For example, stationery, they can have in the same shelf your own product, the big third-party branded product, and also some kind of unbranded product. Obviously, you will see different prices. Customers will have a choice, but here, no pricing, it's $1. But it may be, for example, here as they say, a branded product maybe 60 pages $1, unbranded 80 pages $1, your own brand maybe 70 pages $1. So you can work it out in that way. Some of the things are sold in multiples. For example, 4 cans for $1. So maybe unbranded you might sell 5 cans for $1, and maybe your own brand you might sell 4 cans for $1. Your branded products you might sell 3 cans for $1. So remember, you have to be very, very mindful. Price is same, but quantity may vary. So just because it is branded, unbranded, and BS, the price will not change. We discussed about the suppliers. So generally, BS stocks a wide range of goods, including food, household items, stationery products, and even clothing. But I think in my industry analysis, I spoke about the frozen food coming into these shop shelves in the recent past. That is to increase the number of shoppers and also to increase the number of trips and also probably to increase the basket value also. So they are not talking about in this particular scenario whether they have frozen foods, but that is the trend now. So maybe a question might come, they want to introduce frozen foods into these shelves, and maybe some refrigerators, deep freezers need to be bought out, and raise in money for that kind of a thing, because you have to remember 240 shops. Whenever you want to introduce something, it can be very heavily capital intensive, but you don't need to do for every shop. You can think of certain marked shops to start off on a trial basis, and then later on gradually increase it to all the shops. So these are some of the things that you probably want to think when you are budgeting, when you are suggesting certain improvements into this area. So generally the customers come with the premeditated idea of buying specific branded products. However, you and I know when we walk into these dollar shops, supermarkets, we have something called impulse buying, and then you might walk around the shop and buy many products, much more than what we thought. For that purpose, your stores or the retail outlet must be very, very attractive, eye-catching. When the people come with children, they you must be catering to the the diversity of people, children, old age, young age, all kind of people. So impulse buying can make things, because people don't feel so much when it is $1, they can go on stacking up many things in their baskets because it's low prices. Some will just come to browse the store. Yeah, I'm not talking about online browsing. It's just inside the shop browsing. So to see whether what they require, whether they have something like a screwdriver or garden tap or something like that, they must be looking all the time. So remember, we were discussing in the other analysis, industrial analysis, I said the suppliers here, they don't have too much of merchandising power. So it's basically their product, their quality that will attract the shopper. So the suppliers need to be very, very conscious about the quality of the product, That is what is going to attract, because there are very little advertisements in these $1 setups, because they are low cost essentially. They don't want to spend too much of money on things like advertising, etc. And our company policy, I'm using the term our company policy because I want you to start using those words all the time to say our company, I recommend, we must do, that kind of a thing, because you must belong to the organization. Just assume that you are working, instead of your workplace, wherever you are now, you are working in BAs. So your present place you are working, you know your CEO very well, you know your finance director very well, you know many of the information. So that kind of attitude should be there. When we take that kind of attitude, this exam becomes a very, very interesting one. In fact, I don't want it to think it as an exam. It is just some problem coming up, something wanted, and that 45 minutes you want to give some kind of a solution. That is what it is all about. So our policy of our company is not to source anything more than 5% of the products by value from any one of the suppliers. So by value. So I'm sure $1 is the selling price. You will see later on the average, the margins, what they are talking is something like a 37%. So if you take average, each product on average must be costing them $63. Here and there, up and down, but on average, $63 to $64 is the cost of the product. So they buy only 5% of the products on value terms from any one of these suppliers. So they must be having a fairly diversified range of suppliers. There are 2,000 products, and for 2,000 products, surely if you are going to buy only 5% from a particular party, you can work it out and see the number of suppliers with whom they are dealing in this setup. So there is lot of supplier coordination that need to be done, because you are not dependent on couple of few big suppliers to supply your needs. You are dependent on many, many small suppliers to supply your needs to 240 outlets, some in south, some in north. And so they buy large quantities and surely they obtain bulk discounts. But even though they are buying large quantities, they are restricted to 5% of the products. So the maximum value they buy from particular supplier is just 5% of that particular product. That's how I interpret it. I hope I'm right. Suppliers branded and unbranded are purchased directly from their manufacturers. Obviously, the margins are higher on unbranded products. Reason being, because it is unbranded, it's cheaper, and therefore the market is very narrow. So the suppliers will sell it to us at much more cheaper price. So the average gross profit margin is something like 37%. So you can see some may be going up to 40, 45, I don't know. Some may be in the 30s, average into 37. Branded goods surely is not so coming cheaper, because they are the branded suppliers will have the facility of giving the product to traditional retailers like supermarkets, and therefore the margins what you can get, because therefore the demand for their products is much more higher than for unbranded products, and therefore the branded products may be not having the same margin. Own brands, we tell our supplier, this is the exact way I want it, and as the example says, normal standard sheet the unbranded notebook will have 80 sheets, but we will say put 75 sheets because our reputation, all that, we can reduce the number of 5 pages. We are not going to hide it. We are going to say it's 75 pages, but people will still feel buying 75 pages BS product at $1 rather than buying 80 pages unbranded product at $1. So I just want it to go into your head whether it is 75 pages or 80 pages, it's $1. The difference is maybe in the quality. Generally, the own brands have a very higher margin than the branded or unbranded because you are making it very specific to you. You can negotiate, and surely right at the moment we have only 20% of our product portfolio in the branded. So as a long-term strategy, I would imagine them going to increase that share from 20 to some other percentage. That may be another area where you will be asked to work in one of the variants. They might want to increase your own branded because that's where the margins are. That's where the margins are. You might want to reduce as much as possible the branded because the branded brings the lowest margin. At the moment, the branded brings the lowest margin, right? And branded brings the second highest sales or the second highest number of products. So let's see as we go on what they are talking about. So they have two large warehouses, one in the north, one in the south of country. Incoming deliveries from suppliers are broken down and organized for delivery to individual stores used in a fleet of trucks owned by BES. So we have our own fleet and the suppliers must be delivering goods to these large warehouses in north and south, and from there our own fleet of vehicles will take these goods to various stores. I can think of a couple of things here. They might think of increasing the number of warehouses from 2 to 3 or 3 to 4. Maybe they might think some in one in west and one in east, for example. So they can have that kind of a thing because that way probably they can reduce the distribution cost because you can have the fleet of vehicles parked in 4 areas and small territories you can cover it up. That may be one thing. Another thing possibly I can think of is outsourcing because for a company like this, we can think of if you are wanting money, we can sell the fleet and go for outsourcing. That may be an arrangement that is possible. So these are some of the changes that you can think of in the near future when you are preparing the budget. So they are given us the financial statements up to 31st December 2016. Remember, they were talking about you being responsible for the group budget. So maybe 2017 budget is already prepared. They might give some information in the unseen about the budget, and you may be asked to comment if the budgets were to be, split for 4 areas, what the changes will be, etc., etc. So there are other retailers serving the SPP, single price product, but BES is the largest in country E. But we saw in the industry analysis, there are big people with many thousands of outlets. We are just 240 outlets, including the 5 which we opened in the new area, what we call the X country. So we have the greatest number of stores offers the widest range of products in this retail sector. They do something very continuously. They monitor in order to identify change in shopping habits. So one thing I can think of is something like data mining to know the shopping habits of your customers. They might want to, this is the way that they do by introducing these loyalty cards, etc. They can find the shoppers' purchasing pattern, purchasing behavior, that kind of a thing. So if they might think of it, so far they are not told, they might think of introducing a loyalty card for your customers, and through that loyalty card, you can mine their data to see what kind of purchasing what they do, what is the period, which times do they come, which days of the month they come, that kind of a thing, you may be able to get it so that you may be able to better target the market for different scenarios. So they basically monitor, this is a very good thing they are doing, added every week. So you can see the procurement man will have lot of work to do because new products are added every week to maintain customers' interest in the product range and to adopt seasonal demand. These dollar shops, essentially, they were seasonal shops at one particular time, or gift shops, as I discussed in my industry analysis. They were essentially either gift shops or seasonal shops. But nowadays, with the recession coming in, people have shifted to these dollar shops, not only to buy the seasonal products, not only to buy the gift products, the shift is very much towards your day-to-day grocery. So, but you must never neglect the seasonal and the gift products because there you have very high margins. That's the way you can compensate for some of the low margin grocery products what you sell. Because very unlikely in the groceries range, you can get a 30%, 37% kind of a markup or a margin, right? So new products are added every week to maintain customer interest and to adopt. New products are carefully selected to ensure there's something to catch up the eye of every socio-demographic group of customers. One thing what I saw in this company, if I were to be critical later on, in the board of directors or at any level, there is nothing called research and development or a research department, particularly on the marketing research. I suppose they need to invest on marketing research because they want to keep an eye on every socio demographic group of customers. Okay, for this lesson, this little bit of video presentation, I'll come out with the balance later on. Look into the future. So basically, they are looking for new opportunities to expand. They are thinking of optimizing the use of current stores. So here, I think one day sooner or later, they might shift from this single price concept into multi-price concept, like the company Dollarama. They may not go for a big range, but $1 to $3 range, they might go for it. Because people come to buy $1, but if there are $2 products, it will be a big advantage for them to buy that also from this particular outlet. So way to optimize the current stores may be to go for those multiple pricing, not a big range difference, but maybe $1 to $3 kind of a thing, right? And opening new stores at home, abroad, and also trial country will start at the move to expand abroad. So already we are in X country, but we may not get restricted to X only. We might we might move to country Y, country Z, etc., etc. At present, we has no intention to sell online. I don't know why they have given this last sentence. For me, it's an issue. Even though they have no intention, the present trend is many people to go into the online sales. So it may be something that can come up, like opening up a website, kind of security measures you need to adopt. That may be another new development, even though it has no intention to sell online. By stating that statement, I believe you are in for some greater things. So this is just a little bit of your management case pre-study. So we have run up to page 5. The balance within next 1 or 2 days, I will do it, put it on the YouTube. I welcome any of your comments on any of these things, whatever you have. And if you are happy with what I have done, and if you are interested in joining my online classes, send me an email to my email address. I will give my email address so that you can always send me an email and contact me, so that uh, you can always get Premakumar at Premakumar Premakumar at learnsmart.online. Premakumar at learnsmart.online, or send me a Facebook message. I will come back to you. I'm just starting now classes. I'm happy to say last case study, lot of success all over by God's grace. So I believe this time also there will be more success coming up, but I just want to give some my insight, my knowledge at very reasonable, affordable prices. I'm from Sri Lanka. I do online classes, either one-to-one or on group basis. Thank you very much. God bless you. I'll do the balance part and put it on YouTube. Once again, thank you.